Hey guys, hello everyone. I am Apeksha and I welcome you back to this video series which is dedicated to learning the stock market basics. So today we are going to discuss two very basic but important terminologies, which is face value and market price. So in the coming 5 to 6 minutes, I'll give you an overview of both these things and try to make you understand the significance of both these terminologies. So let's get started and move one notch higher towards our goal of becoming market ready. So first of all, I'll talk about what is face value. So now face value is the price or the value which is given to a particular share by the promoters of the company. Also, if we talk about the company when it goes into liquidation or when the company winds up its business, when they shut down the company, they have to pay back all their stakeholders. So they'll pay back the creditors and take the money from the debtors, and they have to settle everything. So at the same time, they have to also pay back the equity shareholders. So minimum this amount the equity shareholders can expect to get. So face value is the minimum amount that shareholders will get. Why? Because in the balance sheet, if you check on the left hand side, which is the liability side, the uppermost column is, or the uppermost section is the share capital section. So what do we mean by share capital is the amount that is invested by the shareholders in the business, right? So share capital's value is derived by multiplying this face value by the number of shares. So yeah, that is what you will get the face value once the company goes into liquidation. This is the bare minimum value of the share that is given to the particular share by the promoters of the company. Yeah, now we have understood what is face value. Now we can move ahead and see what is this market price. So now when I say market price, this is first of all defined, or first of all the company defines their market price when they launch an IPO, when they go public. So when they are coming up with an issue, with an initial price offering, that's when they come up with the market price. So they have to come up with this, and how is it determined is that they will come up with a valuation for their business based on different methods. So in that they will see how is the company performing, the assets of the company, liabilities, the profitability plus the margins, and based on that they'll come up with this figure which will be the market price of that particular share, which we as investors or general public will pay if we apply for that particular IPO. So now that is primary market. So whenever a company or any institution comes up with a first time issue or the initial offering, that is called as primary market. And then when the shares are eventually listed on the stock exchange, and then when we start dealing in them, when we start trading in them, then they become a part of secondary market. So today if I say that, oh, I bought Sun Pharma, then what I am essentially saying is I bought Sun Pharma in secondary market because Sun Pharma is already listed, right? So that is what. Also, market price is importantly, you have to understand, it is the perception of people towards that company. So it is the value that people have in their mind for that company, right? So that is the perception of people. Now, this value is impacted or is affected by a lot of external and internal factors. So now what are these factors? Let us have a look at it, and why is it important for us to know? So now first of all there is demand and supply. So if there is more demand, the price go up, and when there is more supply, the prices go down. So this is our normal rule. Also the financial results of the company come up. So they come up on a quarterly basis as well as on a yearly basis. So these things also impact the price. Then if there is any specific plan of the company, say that there is Tata Motors and they are coming up with one factory in some place. So that is one news, one big news for the company, right? Then there is corporate action. So on corporate action, we will have a talk, but to give you an overview, it is a news or it is a decision that is taken by the company which impacts the market price of the company, okay? And then there is monetary policy. So monetary policy is nothing but the interest rate decisions which is taken by the RBI, which impacts all of us, the economy and also the companies. And now next is government policy, any particular government policy which may impact that particular sector or that particular company. So now we cannot say that this news will impact the particular share in a positive way or a negative way. Why? Because it totally depends upon the perception of the people, how people think that this news will impact. So now to give you a very simple example, if we talk about financial results, we say that, okay, so the financial results are good, the figures are good, the company is doing good, that means the share has to do good, but it is not the case every time. At times it happens that the financial results are good, but the share is not performing that well, right? So that may happen, and that happens. So that is why when I say that it is the perception, that means it is not just the how the company performs, it is also how people think that the company perform, right? That's what I mean by perception. So now I'll give you a simple example in order to understand what I essentially mean by perception of people, and we all can easily relate to this particular example. So this is the chart of Nifty during demonetization, which will give you an overview of why is the thinking of people important, or why is the perception of people towards the market or any particular news is important. So the circle which you can see, it is the time during demonetization, and after that it is the post demonetization period, right? So during the demonetization time, Nifty was at around 8,500, and after demonetization was announced, within a span of around 8 days, it came down to around 7,900 levels, which was a fall of 600 points, right? And after that, if you see, it has just kept moving up, and it had made a high of around 11,800. So in this time span of around 1.5 years to 2 years, we got a lot of negative news related to demonetization. So it said that the demonetization was a failed attempt of government. Around 99% of the money was back into the system. It did not help corruption, nor did it help terrorism, which was the aim of government behind demonetization. So we got a lot of negative news, we got a lot of negative analysis from everybody in the market. All the news channels were showing that. In spite of that, look at Nifty, look at what has happened in the markets. The markets have kept going up. So this is why I'm saying that perception matters. So the perception of people, or what they think about the markets, about a news, matters. So we cannot say that this particular news is negative or positive for a stock. It will depend upon the collective analysis or collective thinking of the people. So I hope it is very clear to you that any particular news we directly cannot say that it is positive, negative. We will have to analyze, we will have to keep a track of how people have been reacting towards any of this kind of news. Yeah. So this is everything about what is market price, what is face value. Market price will keep changing every now and then based on what people think. There'll be buyers, there'll be sellers in the secondary market, and every day the prices keep changing, right? So now I hope this is clear. If you have any queries related to the same, then please ask us in the comment section. Also, if you think we should come up with any video related to the basics, then do tell us in the comment section, and we will keep coming up with such videos every day. For that, you will have to subscribe our channel and press that bell icon so that you will get the notification whenever we come up with a particular video, and we can move one notch higher towards our goal of becoming market ready. Thank you so much, guys.